Today is Friday, April 12th of 2024, and I'm recording this video before the market closes. It's about 12:40 Eastern time, so still have several hours before the market closes, but don't plan to really do any more trades today unless one of our existing orders get filled. So I just thought I'd talk through our GL trade today. Of course, as all of you know, a big, huge down move yesterday, and so looking for an opportunity to repair it, because usually what will happen is we'll get a bounce and then who knows, and I'll talk through the who knows in just a minute here. But here's the trade we did, and we did it for a credit, basically $21.70 minus the 40-cent commission. So we bought to close the 3GL April 19th $105 cash put options that we had sold back before this crashed, obviously. And in order to do this for a credit, to get it rolled down, we had to go out to November 15th and sold the 70 puts, but sold twice as many. So we bought back 3 of the April puts and sold 6 of the November puts. So 6 times 7, we have $42,000 at risk. So our risk did go up because we initially had, I think it was just over 30,000 with these April put options. And now we're at 42. So about $10,500 more at risk. So not a huge amount. We're still under our max position size, so we can still add to this, but I'm not adding anything right now. I just want to wait and see what happens with it. But look what we were able to accomplish. So of course, yesterday gapped way down, and we were right in here about this 105 right there where it closed a couple of days ago. But we get it all the way down to 70. So over 33% we were able to improve it. We did have to increase our risk by 10,000, so about a 33% increase in risk, but 33% drop in strike price. So now we're a lot closer to the money. And I know some of you are having a hard time getting it filled. Usually what happens with these is, of course, we had a huge spike in volatility yesterday with this drop. And so normally as things start to settle down, that volatility will just decline really hard. I think that's part of what's happening, while some were having a hard time getting it filled an hour or two after I filled that order. Just kind of keep that in mind. When you have a huge volatility spike, once things start settling down, it could be as fast the next day. Not that it's going to go to zero, but that volatility does go out of those options pretty fast. And one way you can do that is by looking at the various implied volatility for the different expiration days. I remember yesterday, this one here, this implied volatility for these November options, it was well over 100. So now we've already dropped to 89. So that volatility, it does drop off pretty fast, and that's why it's important sometimes to get these rolled out. Of course, I was waiting to see if we were going to keep moving lower, because that's always a possibility as well. But with it kind of settling down, then I decided to just go ahead and get it rolled today, and we'll kind of see what happens. So now I just kind of want to peek at the market, because we're at an interesting spot here. So we're of course, at the very sharp increase in price, but now we're kind of looking like we're trying to roll over here. And notice where it's at. It's right at, this is the daily chart, the bottom of the chart. It's right at the green 50 moving average on this daily chart. Now look at these volume bars going all the way back to, let's just go back to here. Let's go back to March 8th. So about a month. Over the past month, we really haven't gone anywhere. We did make a little bit of a higher high. We did do that, but our lows are kind of trading right around the same areas they were back on March 8th. And we're getting close to that area right now. Now volume is low today. Of course, we're I think not even halfway through the trading day yet. Oh, yeah, about halfway through. And so where's it going to find support at? Well, initially, probably going to find support right around this green 50 moving average. That's kind of the obvious first place. And if it breaks through there, then we could see a pretty sharp market decline. We have a gap right down here, and the high of that gap, or the low of that gap, is about 498 on the SPY, and the gap would start about 502. So that could come down. If we filled that gap, we'd be looking at about a 2.5% drop, so that's definitely reasonable. And if you look over here, the problem with it going up so fast is that you really don't have any good support. The first real support you have on SPY will be right in here, about 480. So if it dropped to 480 from where it's at now, let's just kind of see what percentage drop that'd be. Move my line there, it's fine. All right, so it's going to be about a 5% drop. So 5% drop is definitely in the realm here if it were to continue rolling over. So let's kind of keep that in mind as you place your trades. We are starting to build some hedges, and I like to have a pretty good stable of hedges. So you'll see us building those in the coming months, multiple months here. It'll take time to get the size hedge we want. It's really based on what your preference is. If you're trying to go delta zero, then of course you'll have a lot more, but you'll have a lot more, you have to adjust those a lot more. I'm not looking for delta zero. I'm just looking for during the next huge crash like we had back in March of 2022, March of 2020, and also the Great Recession. That's the kind of stuff I want to protect against, or be in a position where I can take advantage of it instead of having to adjust a lot of positions. So that's my thoughts. Again, I'm always glad to answer your questions, so please shoot me a message on Patreon or Discord or YouTube. So that's all for today and for this week. And if we have any orders that get filled between now and when the market closes, I'll put them in the post, but they won't be in the video unless just something extraordinary happens. Otherwise, I hope you have a great weekend.